Thanks for joining our session today on Innovation Powered by Payments. I think the title speaks for itself. And my name is Glenn Sarvati of 154 Advisors, and we have what I think is an excellent cross-section of experts across the ecosystem to really share a variety of perspectives on this topic, and I think we should be having a great conversation. Let me just remind everybody, if you have anything to add to the conversation, you should see the chat window available in your on your desktop. If you could add, we will be monitoring along the way and adding to the conversation through your questions. We'd love to get your feedback. With that, let me turn it over to our panelists for a brief set of introductions. Juan, why don't you start us off?
Yeah, hi, my name is Huang Liang. I'm with Very Good Security, otherwise known as VGS. And we are a company that helps our merchant customers, as well as payment facilitators and card issuers, take greater ownership over their payment stack.
Great. Amanda, how about you?
Sure. My name is Amanda Orson. I'm the head of North America for Curve, leading our US expansion. Curve is an all your cards in one fintech company based in the UK. We currently have 2.1 million customers and are excited about launching in the US.
Great. Amanda? I'm sorry, Peggy? Sorry about that.
I am Peggy Mango. No, thanks for having me. I'm excited to be here. I am a partner with PayPal Ventures. I previously spent time in product in payments with Google and also with Wells Fargo. Super excited to be here. Thank you.
Great. And last but not least, representing the banking side of the equation, Attila, if you'd say a few words, please.
Great. Thank you for having me again. And my name is Attila Chutak. I am with City National Bank. We are the 25th largest bank in the U.S., predominantly catered to the entertainment industry, but we have a deep understanding of the rest of the industries around the country.
Great, thanks. So let me start off, Peggy, I think it might make sense to start off with you from PayPal Ventures, just a venture standpoint. I'm curious, what is your process for determining the types of opportunities that you want to invest in? And by that, I don't mean the quality of the management team per se, but the actual nature of the product and how you kind of make that determination. I think it might help us to kind of set the framework of how we talk about how payments can power the innovation.
Yeah, I would love to start. So when you think about PayPal, PayPal is a two-sided network, right? So we serve the consumers, and we have consumer features, and we serve merchants, right? So PayPal Ventures is broadly looking to invest in companies that are innovating in payments and commerce for both the consumer and merchant ecosystem. And so a portion of our investments are strategic, meaning driven by the needs of our PayPal leaders. They have certain needs for business, and we partner with them to understand their needs. And as part of that journey, we may end up investing in a company that PayPal is working with or wants to work with. Most of the other of our other investments are really thematic in nature, right? So our team develops themes surrounding payments and commerce and the broader innovation ecosystem. But these things take into account changing consumer behaviors, macro forces, and even the maturity of technology. So, for example, one of our themes right now is, we call it crypto grows up, right? So when you think of cryptocurrency as an asset, it's becoming more and more acceptable for consumers and institutions to hold that asset class. So we're looking at it like, okay, what other companies are helping these platforms as they mature? And so that drove our recent investment in a company called TaxBit, which provides tax reporting for cryptocurrency platforms.
Interesting. I want to come back to that as well in terms of crypto grows up. I think that's really, especially given the way you've enabled the PayPal wallet moving forward. I think it's a real great place to maybe follow up a bit later. Huang, your company, VGS, Very Good Security, is in a really interesting kind of top of mind spot right now with data security around personal identifiable information, PCI compliance, et cetera. I'm curious, where do you see that market in terms, and you're working, as I understand, directly with the merchants as opposed to the end customers. is everybody fully aware at this point? Do you have to really kind of sell the proposition, or are people pretty familiar with what they need to do, and it's a matter of finding the best way to accomplish that goal?
I think people are pretty well familiar with what they need to do. So what we try to do is we try to help our customers understand, or as well as our prospects understand, that we can help them operate on sensitive value while eliminating the burden to secure that sensitive information. And for issuers alike, as well as merchants, what they end up doing is end up relying on their platforms for that data level security. But as a result, what they end up doing is becoming locked into those platforms. We try to unlock that. We provide them the data security layer so that we de-scope them. And actually what helps them with that is the ability to innovate faster, bring products to market faster, bring features faster to market. Because with PCI requirements, you are required to do various steps to ensure that your code is secure, you don't have any vulnerabilities. And every time you release code, so if you're releasing code every month, you have to go through that step. It's a huge burden to set up a card data environment, as well as a burden to maintain that ongoing. So we remove that burden. And so since they don't have a footprint of sensitive data, they can operate on the other data that's really valuable. Sensitive data such as PCI and even PII, you can't really do anything with it. But what you can do is access information that lies behind it. So PCI data and PII data is used mainly for validation and authentication, but it doesn't drive your business logic, which is what we try to free up our clients to do, as well as to unlock them from being locked into their existing vendors, so they can take greater control, have complete ownership over their own data.
Great, that's helpful. And from the business and merchant perspective, Amanda, on to you, where you've got more of a consumer end user focus. You mentioned originally in your introduction that you've got some really nice traction already in the EU, UK. I forget the exact number, over 2 million subscribers and downloads. Now that you're looking to move into the US market very shortly, I'm kind of curious how does the model need to change at all, given the difference in consumer behavior for the US consumer as compared to the ones? Has that caused you to either change your model or your messaging in terms of the go-to-market approach?
Yeah, so I think that Shahar, our CEO, would be the first to tell you that Curve was sort of invented for the US consumer. The US consumer has something like 7.2 cards, or there's a war of stats on that, but a lot more cards than the rest of the universe, including the EU and UK, where we are right now. So we think that the product proposition is actually a natural fit for this market. Curve, being all your cards in one, is really focused on simplicity and convenience. We're betting big on the ease of use of transacting for consumers, and we think that the product actually makes a lot of sense for this market.
Mm-hmm. I definitely see it makes sense. I was just wondering, in terms of the approach, do you have is there a date? You're going live in the US in the pretty nearby future, correct?
We'll be out in beta probably end of summer or early fall. But right now, the biggest real difference between what we have here in the US versus what we have in the UK is that Curve in the US will be a credit card with a credit proposition on the front end,
as compared to in Europe, where maybe there's a bit more of a debit-centric approach to things?
Correct.
That would be the big difference? Great. Okay, great. Thanks.
Yeah.
Attila, you're the representative here from the financial institution space, from the consumer, and as I understand it, you're focused on projects within City National, both for consumers and businesses. You serve as something of a product evangelist, specifically around real-time payments, which is getting a good bit of attention right now in the US. Can you tell us a little bit about, I don't know how much you're able to share about some of the projects, but I'm curious on the opportunities you see, and to the extent to which the demand is already, or do you have to actually create the awareness of what the potential is for some of these solutions?
Yes, thank you for the question. So yeah, I probably should have done a little more deeper introduction. I am responsible for product development and product management, if you see, within the banking space for retail and commercial clients, particularly focusing on emerging payments. We've seen, especially since the advent of COVID, an increased interest in other payment channels that normally don't pop to the surface as aggressively as they did since COVID. In the instance of a business, we've had a lot of corporate clients that were asking us to further digitize and automate their payables and receivables process because at that time when the whole country, the whole world was in a lockdown, a lot of individual businesses and employers were not able to enter their office space and get access to invoices that were physically delivered to their office and then initiate payment. So yes, at the bank, given the extent of innovation that's happening within the emerging payment space specifically, we have seen an increased interest in retail, on the retail and on the commercial side in real-time payments specifically. We are going to be launching real-time payments within the bank, retail and commercial space before the end of the year. A lot of the corporate client base that reached out to us directly in between last year and this year was actually a little more. We were to some extent surprised that they were more informed about these faster payments like initiatives than we expected. With that in mind, we are continuing and embarking on a very aggressive evangelization internally and externally on real-time payments specifically. And then whatever other variations out of this emerging payment comes around, whether that's going to be the Zelle, B2C, C2B like space, and or the public solution that the Federal Reserve Bank is going to launch within the next year or two called FedNow.
Mm-hmm. That's an interesting point. I'm sure anybody who's listening from outside the U.S. is probably wondering, I mean, real-time payments doesn't sound like a late-breaking bit of news for a lot of other geographies. So and it's nice to see us finally getting to the table. Let me follow up on something that you said there, Attila, and throw it out to the audience because it's one of the questions top of mind. It's inevitable to kind of get into COVID on conversations this day and age. Any thoughts of how the behavior and the market needs have changed during COVID, presumably for the long term, as opposed to just a short-term solution? Because hopefully we're kind of beginning to reach something of a emergence from the other end that may have changed the way you think about assessment and prioritization of opportunities. Peggy, you want to start with that one?
Yeah. So we've all seen the documented increase in e-commerce, the acceleration of e-commerce, the various charts that just showed how COVID accelerated the trend that was already happening. What we've also seen is not just an acceleration of e-commerce, an acceleration of digital entertainment, right? So gaming and streaming and newsletters and podcasts and influencers on existing social networks, influences on emerging social networks. And so what we're looking at is really this idea of this creator commerce, right? So how are these creators, monetizing, or how are they selling their content? And what's interesting is just the movement from, like, if you think about the real world, is you had this very large and growing gig economy, but that was a service economy, right? People were out and they were, hustling, using these gig platforms and fitting them into their lives in various ways. And what we've spent a lot of time focusing on through COVID is these digital creators. It's maybe, one person creating content. What platforms are they using? How are they selling? How are they collecting payments? And we only expect that to increase. So, you can think about that, like, once everything opens back up, people will go back outside and into theaters, maybe instead of watching so much on Twitch, for example. But there's probably there's probably a lot that's going to stay, right? And so the platforms that get developed right now and get accepted, we think will sustain, and it's very interesting from a investment perspective and payments perspective.
Yeah, my take on that, and I've seen a lot of kind of thought leaders kind of saying, my personal perception is we'll probably regress a bit when things open up, but we've clearly jump-started where we would have been, and we're going to stay ahead of where that curve would have been as far as adoption in the long run. Amanda, I think it's a good logical kind of segue to your business as well, because again, as we reopen and start using credit cards more frequently in a setting, I assume that plays directly into your business. Does that change the way you think about the timing or the messaging around the launch of your product in the States?
It's actually a great tailwind. So one of the things that it's now laughable. When I went to London the first time to meet with Curve, I had the opportunity to use like a contactless card. And I was like, what is this magic? Because that doesn't, like, there are almost no point of sale terminals with which to do that here in the United States through as recently as 2019. And so when we came back to the US and we were opening up the office, one of the bets that I was making is that the MTA going contactless was really going to be an accelerative trend, the same way that the tube going contactless in the UK was basically the harbinger of going contactless throughout. Now, that is hilarious because COVID has fundamentally changed that. We had something like 16, 18% contactless adoption. And now the most recent stat I've heard was something like 60%. So all of these credit unions and banks and smaller issuers having to recard their user base is a very expensive proposition. I think that Curve is well positioned to help make all of the underlying funding cards also contactless, in addition to being able to integrate natively with what we refer to as XPays, Google, Apple, and Samsung Pay.
That's an interesting point about the MTA, the subway system and overall transit system in New York City, which makes sense that they would have been a logical kind of harbinger and driver of adoption. And then we're running still, 15% of the volume on public transit, but it got done for other reasons as well. And I also remember the last time I was in the UK kind of sitting in the penalty box because I didn't have a contactless card and I had to get out of the queue and go and stand in the line of shame to try to complete my transaction. Huang, any other thoughts on that side as well in terms of how COVID might have affected your approach to the business?
Yeah, so I think what we're seeing some trends in is in our marketplace clients. So typically, their access to financial instruments have been hindered. And what you're seeing marketplaces do, very similar to neobanks and challenger banks, is they're extending financial instruments to their sellers, right? Which hasn't really been seen before. So you see marketplaces like Pinterest to could be Etsy and so forth, extending payment products, extending banking accounts to these individual sellers. So we're seeing some transformation there where non-traditional players are offering traditional banking products. In addition to that is one thing you'll see as payments start accelerating on cards, particularly e-commerce. What really hasn't changed and is the cost to process these payments, right? And Durbin addressed it from how much an issuer earns on a debit regulated interchange, but it didn't address what we call the merchant discount rate, which is the full baked in processing cost that a merchant would pay. Now, with the first set of innovation, we see Stripe, we see Braintree, they've kind of bundled and have a blended pricing model. Now what you're seeing is larger merchants and they're trying to take more control over their payment stack and creating a marketplace where they're forcing payment processors to bid for their business to drive down the cost, right? So we're seeing trends like that are happening there. We're enabling our clients to own that payment data rather than hand it over to the Stripes or the Braintrees of the world. In addition to that, we're trying to unlock that for smaller merchants so that they can also participate in the marketplace to help drive down the overall cost of their processing. Because for most merchants, it ranges anywhere between 2.5% to 5%, depending on the size, dollar amount that they're processing and so forth. So we're seeing a lot of things change from that perspective. And as you know, there's more restaurants are going delivery, they're accepting payments, online. And so that's eating up into their margin. So sooner or later, you can only eat so much of the merchant's margin. Something's going to change.
That's a really good point. Attila, this one's for everybody, but I think it's logical to kind of start with you as the financial institution representative here on the panel. It's kind of that age-old question of competitors versus collaborators. When you talk about the newer fintechs, or more broadly, people coming in to encroach on the space is in the view of some, or helping to move the space forward, depending on which side of the coin you're looking at. I have a perception that we've kind of moved more in the direction of collaboration over the course of the last few years, but be curious to hear the takes of each of you on that. But Attila, again, as the member of the banking community, why don't you take it first?
Sure, thank you. And I actually want to piggyback a little bit on the previous question that all of my colleagues have responded on. Within the banking space, we've seen a specific change in how products are developed because of the pandemic, right? So right after the second lockdown, all the way through the end of the year, we've seen more modernization and digitization in that period of time that we've seen in the last 3 to 5 years, which is pushing banks as well as businesses and merchants and the fintech ecosystem to address and catch up to that demand that was created by the healthcare crisis. But coming back to the collaboration and the competition question specifically, traditionally banks normally have always looked at the fintech space as as an organization or a space that encroaching into the banking environment when they compete with the same type of solutions on, in some instances, more evolved solutions than banks were able to provide, because they can turn on a dime a lot faster. They are not regulated as heavily as banks are. But that because of the pandemic, we've seen a change, a shift in mentality. I think ever since that lockdown really affected the whole country, the whole world, even within the space that I play in, emerging payments, we've seen a much more increase in collaboration. The fintech obviously is going to be a major piece of the puzzle when it comes to banks being able to provide the solutions that are driving or filling the gaps that we've known about for a long time, but now we are addressing significantly faster. I mean, it's obviously helping a financial institution with building that brand reputation. We are partnering with the best and the best in this space that allows us to offer more functionality and features, not just to the consumer, but also to the business side. It allows the bank to aggressively pursue increasing the consumer base, retail and commercial. At the end of the day, it's going to bring up the cost for a bank as well as the user of those solutions. And again, overall, collaboration is going to continue, I'm sure, down the path of modernization that's happening within the payments landscape specifically.
Thanks. Peggy, I think it's a great question, given, PayPal was kind of front and center in the first wave of companies that were kind of thought of as, okay, here's the new model that's going to kind of move banking into a different world. And obviously, with the venture side of things, you're continuing to look at new models. And any thoughts on that collaborate versus compete paradigm?
Yeah. I mean, and also I'll draw upon kind of the time I spent at Wells Fargo and kind of how like a large institution thinks through the buy versus build, the partner versus build. So I think that I would say 5 to 7 years ago, it was more of a question like, do we want to partner? There was fear of partnership. There was concern about who owns the customer. That concern is still there, but I think the consensus is collaboration at this point, right? And the reason is because these financial institutions and credit unions, they need to get to market quickly, and they need to reduce operational costs. So if they can partner with a provider to help them with, KYC, AML, risk management, and they can partner with that subject matter expert that spends 24 hours a day thinking about it and writing technology to solve those problems, that can get them to market more quickly with this, for example, this risk solution, reduce not only their fraud costs, but reduce their operational costs for like how they handle high risk transactions, or how they handle AML, KYC outsorts, et cetera. So for me, it's absolutely collaborate to get you lower cost and faster speed to market. I would also add that once you have that mindset, you want to anchor on how you are different and how you deliver unique value to your customers and your community, right? That's your anchor. Like, who are you? How are you different? How are you going to successfully serve those customers? And then use these partners to get those outcomes that you want.
I'd forgotten that you had that background at Wells as well, which it's great to get the financial institution perspective in there too. And going back even earlier than PayPal, part of my experience in the payment space was with a company called CheckFree, which kind of pioneered the online banking and bill payment space, is now part of Fiserv, but reached that same conclusion where I think there was some of that same concern on the part of banks. And back when CheckFree was a standalone company, this was back in the days where you couldn't download the package online. You had to actually go to Egghead Software or someplace like that to buy it in the box and put the disc in and download it. And the cost of actually creating a consumer-facing brand was just so cost prohibitive that it just made more sense to white label and collaborate and work with the banks behind the scenes. And the model's obviously somewhat different now, given the ability to market online and the social media and whatnot. But again, I think the message is similar. Amanda, you're kind of right front and center on this now with the Curve proposition that goes directly to the consumer. What's your thought in the tug of war here?
So far, it's been highly collaborative. So we're definitely going to end up working with people. We are already in partnership with Samsung abroad. The Samsung Curve card is a product that's been out, I think since June of last year. Fundamentally, we think banks are doing a great job. What Curve is doing is basically an enabling. Like, if you were to think of it in an enablement platform sort of way, we're enabling the consumer to use the right tool at the right place, no matter what it is they're actually purchasing. We're just simplifying their payments and the way that they're actually engaging with their money in real time. So the advantage that we have for the consumer is sort of obvious. It's just one card as a form factor and one app. The advantage to the actual issuer is that it allows them to be in the wallet all the time. When you have 7.2 cards, I can almost assure you that you're not walking out of the house someday when we walk out of the house again with 7.2 cards. You're probably taking one. And if the only instrument you have is a hammer, everything looks like a nail. But it may not necessarily be the right card in the right place, given whatever it is you're actually purchasing.
That's a really good point. I mean, and I've heard that phrase as well, that it used to be top of wallet, now it's top of app, and you're making it a little bit easier to keep multiple cards in the game as far as that goes. Huang, any thoughts along this continuum too?
Well, I've always seen banks, financial services has always been collaborative, right? I mean, at the end of the day, you'll see banks, no bank builds their own core banking system. No bank builds their own issuing, processing platforms. So you're actually piping in a bunch of different services. Where I do see changes happening is that there are certain elements that we see with fintechs that they're starting to build on their own. Where areas where that's not necessarily core to their business, or maybe the effort and the load and the lift is a bit too high, they will collaborate on. And the other trend that I see is these technologies or services that are being provided to, whether it's the banks or to card issuers, they're all moving into the cloud, right? And I think what they're realizing is there's no need to keep everything on-prem anymore. It's a better way and more efficient way to operate is in the cloud. And that's why we see all these service providers are starting to provide APIs to their services in the cloud. So it'll continue to be a collaboration, but we are seeing a movement where they're moving off of your traditional, let's be locked into one particular vendor. Let's have options. Let's plug into these different services that we can create our own business versus relying on a single vendor.
Great.
Yeah.
Again, kind of back to the original headline of the title of the session, innovation powered by payments. I'm kind of curious whether it's part of without obviously disclosing any secret projects or whatnot, but thoughts either of your own or things that you've been kind of pursuing that you're able to talk about within your individual organizations, of areas where you just see an unmet need, particularly payments focused, but doesn't have to be, that you would just love to see somebody tackle and come to market to solve some type of a pain point. Attila, I mean, given where you're sitting right now from an evangelist standpoint and rolling out from a real-time payment standpoint, I'd love to hear any thoughts there.
Yes, within banking, we've done a great job in the past 40 plus years of modernizing the existing legacy payment platforms and filling some of the gaps that were shown to us by the consumer, the end user. Where the next place I think that the fintech and banks are going to step into and collaborate, it's going to be that invoicing space specifically, whereby we are either going to create a public or a private national database directory. Think of it a big yellow phone book where every business and financial institution becomes part of it. That's going to allow a user to pull in real time information related directly with a transaction. Think of it an e-invoicing like space. The closest one that I could go to, and as an organization, I mean, as a country, we need to look outside of our borders and see what the rest of the world doing in the Nordic part of Europe, especially the Scandinavian countries. They've done a great job in providing and putting together a pan-European public procurement online platform that allows exchange of invoice in an electronic digital version. Given that payments are now becoming 24/7, 365, I think that's the next place where fintech and banks are going to focus on a little bit more than in the past. We do have currently very decentralized solutions in the US, but I think we need to centralize it and have one point of entry for the type of data that banks and fintechs are looking for the end user clients.
Yeah, I agree. That would be a wonderful one to go after. I know people have been charging up that hill for some time, and the decentralized aspect of the way we do it in the States sure makes it tricky. One of these days, someone's going to make a lot of money by figuring out how to make that happen. And, we probably keep getting closer as we get better technology. Peggy, without disclosing any ideas that you may already have in the works, any thoughts of where you might want to come at this space?
Yeah, look, my answer surrounds the theme that I talked about a little bit earlier surrounding creator commerce, right? So those of us that have been in the payments industry for years have always looked at like micropayments and why isn't it easier to pay 75 cents to read an article, for example, instead of going through a subscription and card down process. So I think we need more in the moment digital ways to pay for content and access. And I think that we're finally getting there, whether it's platform by platform or pan platform solution. I think that with the rise of the creator commerce that's really happening right now, with the rise of more and more entertainment or just engagement in digital content overall, COVID aside, that was already happening, and it already happens even when you're outside. You're consistently engaging with your digital content. So I think we will finally see micropayments in some shape or form soon, and that will be exciting.
I love that phrase, creator commerce. That's a good one. And I would agree with you totally. I found myself doing way too much calculus recently around, okay, I've got X number of free articles left that I can look at on this site, and I really don't want to start paying on a recurring basis on a monthly subscription, but boy, I sure would pay 40 cents, 75 cents, $1.50, whatever, for an individual piece. And there's just no reason why that shouldn't be more doable.
For sure. And it's also when in those areas that you actually have subscriptions, are you engaging with that content on the same device that you logged in? I mean, I've clicked on New York Times articles on a device, and even though we subscribe, I don't know what the password is. So it's like, how do we just remove the friction altogether, right? Like, you would pay the 75 cents, I would pay it. So there has to be a bridge, and that will not only will that open up more commerce and more convenience for the consumer, but it will really enable the creators too. And I didn't come up with that term, creator commerce, but I think it is broad enough to take into account. It's a big enough tent to take into account the writers, the artists, the musicians, etc. that have content out there that could really benefit from micropayments.
Sounds to me like an entire separate session, because I mean, again, musicians getting paid, near and dear to my heart, another topic. But the whole idea is saving the whole media model in terms of getting paid. Amanda, you guys at Curve are in the middle of a great version of this and just rolling it out now. So I don't mean to put that behind you already, but any thoughts about the next thing like that you might want to tackle at Curve or elsewhere?
Yeah, two quick thoughts. One, anything that simplifies the consumer's experience is a good bet. It just is. One of the things that I didn't understand prior, I'm an outsider to payments prior to Curve. So as an outsider looking in, I didn't understand why things like QR codes, which are ubiquitous in Southeast Asia, were not yet ubiquitous in the United States. And like, it's simple, it's inexpensive. Why would we do this? And thanks to things like contactless adoption and COVID, this is probably going to be more of a trend going forward. But on that point, and I think that's something that Attila mentioned, I completely agree that if you want to see into the future, look offshore. Our environment is not only regulated, but it's regulated like in a patchwork quilt sort of fashion of 49 or 50 states and the District of Columbia. And so whenever my UK-based colleagues ask me, well, who's your FCA? Like, who's your Financial Conduct Authority? I'm like, well, that depends. Is it what's the product we're talking about specifically? And where is the company based? There are any of a myriad number of factors that determine that. So yeah, I think that from an innovation or where the puck is going perspective, if it simplifies the consumer's experience, if it's inexpensive to implement or meaningfully reduces cost for the end merchant, for example, and it is going to get through or past the legal and regulatory scrutiny, that's where it's going.
Very well said. And I wish we'd mentioned that earlier. Again, one of the reasons I really like the cross-section of expertise on this panel, the fact that you came into the space without any preconceived notions around the payments industry. You came in from outside, which I think was a great move on Curve's part too. Huang, I'm going to give you the last word because I know we're running a little bit short on time. What would you think we need to kind of look at next as far as a pain point to solve?
Yeah, I think within the industry, it's the friction that's created where different services are, as soon as they grow, they start building up a walled garden. And so making those services available and interoperate is going to be a huge challenge. I think that's the one thing that will keep the experiences that we deliver to end users, consumers, to be more innovative, to be less frictionless, or actually, more frictionless. And I think one of the areas that we should keep an eye on are developing nations. So as we sit here in North America or in the EU region, where the networks are very entrenched, we have developing nations or developing regions that don't have that existing infrastructure. And it'll be very interesting to see how they potentially could leapfrog us.
Great. I want to remind everybody there's more great new content still coming up on the industry stage. So please follow along for the remainder of the day here at Talents. I hope everybody found this as informative and entertaining as I did. I want to thank the panelists once again, Penny Mango from PayPal Ventures, Amanda Orson from Curve, Huang Leong from VGS, Very Good Security, and Attila Sutak from City National Bank. With that, my name is Glenn Sarvati of 154 Advisors. If you have any follow-up questions, if you want a chat window, I'm sure we'd be happy to try to follow up after the fact as well. Thanks for joining us.